Mitsubishi Group has decided to acquire 20% stake in Shriram Finance. And this, remember, the reports have been in for a while now. And finally, this has been confirmed that they will acquire 20% stake in Shriram Finance. Now, do remember, the stock has already surged when the company announced that they will be meeting today for this particular, the finance raise or fundraise. And now this has been announced that, yes, 20% stake will, of course, need the details as to how much money will be put into it, at what price will they be doing it, and other details as well, whether it's strategic, whether it's financial for Mitsubishi. So all of these details, we'll just be checking that. But for now, it is CNBC-TV18 News Break, which is confirmed, where they will be acquiring 20% stake in Shriram Finance. The stock has surged to the day's high. Of course, a lot of it already run ahead of the news that was expected.
Absolutely.
Well, yes, absolutely. You know, Shriram Finance has been in focus on account of this big Japanese investment which could come through, and that seems to be likely now. So they will be acquiring 20% stake in Shriram Finance. Remember that the estimates were that they could invest as much as around $4.45 billion, which could possibly make it the biggest FDI in the Indian financial services. So that is something that we need to confirm in terms of the amount that they would be investing. But nonetheless, this is a huge deal which has taken place. And to put it into perspective, a lot of the Japanese companies have had a lot of interest in the entire Indian financial space. We've seen multiple deals take place. We just saw a deal with Avendus and the Japanese firm which took place earlier this week. And now we do have Shriram Finance and the MUFG deal, which has now been confirmed. So they will be acquiring 20% stake in Shriram Finance. The investment will possibly make it, remember that Shriram Finance itself is India's second largest NBFC at this point in time, and it will be worth possibly around upwards of around $4 billion in terms of an investment. So we're going to get Ritu to talk more about this. But, whether or not this paves the way for an eventual acquisition is something that the street will be watching out for. But as of now, as you can see, the stock is just about lower by around 1.3%.
These details, we're getting it from Bloomberg. So just to put that into perspective, we don't have an exchange release yet, but this is something that Bloomberg is reporting and something that was in works as well. So just keep an eye out on that, because we do need more details to come by as well.
Absolutely. But it's interesting that it's important to watch out for also, because fresh capital comes in. What is going to be in terms of reduction of the cost of funds for them as well? How will it work out for overall credit rating of the company as well, especially the deal size? We'll wait out for that. Right now, obviously, it's a Bloomberg, agency reports, Bloomberg reports that we have picked up, waiting for that official comment coming in from the BSE or NSE or the exchanges as well, right?
Yes, well, maybe we can get some opinion with regards to the deal and the finalities as they will be announced. But we do have Dinesh Khara, who's the former chairman at SBI, joining in for a quick word on this. Mr. Khara, thank you very much for taking the time out. Well, what's your sense? We're waiting by for the details, but there's a possibility of that Shriram Finance MUFG deal of around a 20% stake being announced. So just your perspective?
Yeah, I think it's a very welcome move, and particularly, the way the Indian economy is growing and the kind of potential which it holds in terms of growth. For the capital which is available from Japan, it would be, I would say, is a very encouraging deployment which will really happen. And eventually, it's a win-win for both the countries, for Japan as well as for India. India needs capital, and Japan has got capital to deploy. And, the investments into entities like Shriram Finance will go a long way, because when it comes
Mr.
to...
Khara, just 1 minute before we continue this conversation, because we are getting more details in this one. Basically, the quantum of the deal, they say that they will be investing around 3,962 crore rupees for this 20% stake. Mitsubishi will also have the right to appoint 2 nominee directors and board of Shriram Finance. So finally, we have the number. It's basically 3,962 crore rupees, which will be invested by Mitsubishi in Shriram Finance for this 20% stake. 39,620 crore rupees. That is the number that they'll be investing. In fact, let's go across to our colleague Ritu, who's been tracking this news, and finally this has been confirmed. So it's a 39,620 crore rupee investment for a 20% stake in Shriram Finance. Ritu, is it in line with what the street was working with? How do you read this?
Well, yes, Sonal, this is bang in line with what the street was working with. In fact, there was speculation whether the entire 20% stake would be, bought into Shriram Finance alone, or whether, some of this would also be into the holding company. But the structure is clear. And MUFG is investing through MUFG Bank into Shriram Finance to acquire a 20% stake for about 39,600 crore rupees. And the completion, of course, is going to be subject to all kinds of regulatory approvals. Because it's acquiring the substantial stake, of course, it'll get board seats as well. 2 board seats is what the understanding is. So, not very far off from, where the market was pegging this deal at. Importantly, in terms of impact, immediately what this means is this kind of capital will mean, better capital adequacy. It's already at about 20% for Shriram Finance. So some upside from there. The ROAs would, of course, improve, to about, say, 3.6, 3.8% was the estimate from about 3.2% currently. There's a stronger case for a rating upgrade, and that is very important because, remember, so far, almost everything working in favor other than the fact that there was no strong strategic promoter in place. That comes in, and you have a good case for a rating upgrade. That comes in as well. Leverage, on the back of this credit upgrade, as a better rated company, Shriram Finance can, of course, leverage this capital higher, which will also improve its ROE in turn. Lower the funding cost if that upgrade comes. That is also a clear benefit that will arise from this deal happening. And of course, the risk is more on the side of how the culture, how the integration happens, what the timeline of the deal clearance is. But that said, this is by far the largest deal, the largest FDI coming into the Indian banking space. We'd already seen about $7.5 billion come into the banking and NBFC space this year alone. And this takes the number to well over, $10.5 billion kind of a figure. So that itself is something to talk about. The kind of investment and, the confidence global investors are showing, putting this kind of capital into India, and also, very importantly, the changing regulatory stance, allowing this kind of foreign capital coming in. Mr. Khara, on that note, let me toss it to you. What do you make of MUFG? Actually, this Japan wave we are seeing. First, we had the Yes Bank SMBC deal. There was also a recent deal in Avendus with Mizuho Bank. And now we have MUFG coming into Shriram Finance. Are we going to see more? Have we seen the last of it?
I think the way Indian economy is growing and the kind of potential which it holds for growth in the days to come also, certainly India will be one of the attractions when it comes to potential investment. And having said that, I would say that when it comes to financial sector, this is actually in a very decent shape. When it comes to the NPAs which are there in the system, when it comes to the capital adequacy, when it comes to digitization. So I think they are ticking all the right boxes, and that is why perhaps, they are attracting investment. Of course, we have seen investment flowing in from Japan. We have also seen investment flowing in from UAE. So I think practically we can get to see that wherever such kind of surplus capital is available for deployment, for them, India seems to be one of the most welcome destinations. So having said that, I would also mention that, NBFCs particularly because they are more nearer to the ground. And, when it comes to the SME space, which has got a huge potential to grow. From that standpoint, perhaps, the Shriram Finance kind of a entity would be, support to Shriram Finance entity through MUFG will go a long way. MUFG otherwise is actually known for large corporates, but in this process, they will also be in a position to lend to the small and medium-sized entities in the country also. And Shriram Finance, as it is traditionally, has been known for financing the second-hand vehicles, but off late they have changed their business model also. So I think that will also go a long way in terms of building up its attractiveness for any of the global investors. So that is how I read this transaction.
Okay, well, we have Gurmeet Chadha joining in and Abizer Diwanji. We also have N Jayakumar of Prime Securities for his perspective. Jakes, I'm just going to come to you with regards to this particular deal. It's the largest in the financial space and gives credence again to what is taking place and what the potential is for the Indian financial services sector at this point. What's your reading on Shriram Finance?
That's the question for me.
Yes.
Take that?
Yeah.
Yeah. Well, I think it's a landmark deal in every sense of the word. Shriram Finance is clearly one of the finest NBFCs today in the country, with a net worth already which is significantly more than what most NBFCs would have, which is about 52,000 crores. Trades at 3 times book, and including this 39,000 crores, their net worth will move up to close to 92,000 crores, which actually makes it more capitalized than several banks. In fact, even the large private sector banks aren't capitalized to this extent, other than maybe the top 4. So this is almost like a neobank kind of entity that's been created. It will become a full service NBFC, other than its core strength of transport finance, etc. This actually could pave the way for them significantly increasing their exposure to other sectors. My own personal belief is that this is, like the RBL Bank deal with Emirates NBD, or with the Yes Bank deal, where the 20% stake of a Japanese, large corporation or large bank. Similarly, deals like this, there's been an earlier deal of Saman Capital in the same space. So I think this is just paving the way for large para-banking deals, which is the NBFC deals, or actually banking deals in that sense. So small private sector banks look quite ready to take on large amounts of capital from banks which are well capitalized, especially those in the Middle East, Japan, Singapore, etc. So I think this is a harbinger of many, many more deals to come, and it's certainly a very welcome sign for the recapitalization of the Indian financial services sector.
It absolutely is, Mr. Jayakumar. Let me actually bring in the regulator, former regulator, Mr. Rajeshwar Rao, former deputy governor of RBI, because these deals you're talking about, Yes Bank, RBL Bank, are the ones that he signed off on. Mr. Rao, thanks for your time here. This 20% stake, it's not really accidental at all. I mean, it's large enough to be meaningful, to bringing enough capital, yet below that control threshold. Do you think, even with the changing regulatory stance, where we're seeing a lot of foreign capital come into Indian financials, this is sort of regulator designed for regulators' comfort, so that it improves discipline, but it is small enough to not be the dominant one?
I think, thanks, Ritu. I would largely agree with you on that, and I would echo the sentiments expressed by the earlier speakers. In my view, the proposal is a positive development, which essentially reflects the confidence the foreign investors have in the India's growth story, the growth potential in the financial sector, as well as the strength and resilience of the financial sector. So I think it is a good proposition, and so long as it's consistent with the regulatory policies, I don't think there should be any concerns of money coming in. And I think our regulatory mechanisms and supervisory oversight should be providing sufficient control to ensure that these measures achieve the desired results.
Okay, Mr. Gurmeet Chadha, thanks for staying on. Your reading of the deal, the pricing, compared to, say, 14 days, the SEBI pricing formula of the 14-day average, that was at about 846 or so. The deal has come in at 842.5 per share. What do you make of the pricing of this deal?
I think the pricing honestly is in terms of at what level they are interested in. I think this is a huge vote of confidence in not only Shriram but the overall financial sector. And this is coming at a time where India has been facing FPI outflows. So very welcome move, and I think reflects the changing stance of the regulator, reflects the fact that this industry will become very competitive. I think larger players now will have an advantage because the cost of funds will come down incrementally. For Shriram, for example, it's about 8.8, and the incremental was about 8.1. This should have a rating implication, and the cost of funds drop We saw some deals happening in other spaces as well. So if you have liquidity and your cost of funds go down, it becomes a huge advantage in an environment like this where economic momentum is picking up. Secondly, if you see, this now the overall deal size has crossed $10 billion. So I think, and my personal view is that what we are seeing globally now, the 10-year yields in India, our cost of borrowing will significantly come down. And you can actually see much lower levels. It typically happens when economies are at inflection point at $4-5 trillion. And this has huge implications for overall growth of the market, whether it is consumption, whether it is capex, etc. So very, very big move. And I think Shriram at 3 times book already is one of the better run NBFCs in the country. I think would further re-rate, and this will have a positive spillover to other strong NBFCs also, where cost of funds are lower, whether it is Jio, whether it is Bajaj, whether it is Chola. And also in Shriram, the operational performance is improving. Their gold loan portfolio is doing well. Commercial vehicle is doing well. MSME is now coming back on track. Credit costs are under control. So great operating performance, rating upgrades, more liquidity, more growth capital augurs well for not only them but the entire sector.
Okay, a re-rating is expected. In fact, Mr. Abizer Diwanji is also with us from Neostrat Advisors. Just quickly, Abizer Diwanji, your thoughts on how you expect this deal to change life for Shriram from here on? I mean, do you expect them to step up in segments they're already strong in CV, perhaps in MSME, more in retail? And for MUFG, what do they get out of the deal?
Oh, I personally think that, everybody spoke about the great deal that this one is, and the $10 billion that has come in. I think the issue is going to be, as you rightly said, Ritu, on deployment. If you have $10 billion, you have 5 lakh odd crores of funding to be placed out in the market by all these guys, including Shriram Finance. And they will have to be innovative in where they put out the money. If they say we're going to do more of the same thing, I think that's going to be a value destroyer, because what you're going to do is you're going to create bubbles in these markets. If all of RBL's money is put into SME banking, you'll see a bubble there. If all of the 39,000 crores times 5 leverage is put into consumables and commercial vehicles, you're going to see a bubble there. And the biggest responsibility that the financial sector now holds is that if you're going to have 5 lakh crores worth of incremental credit that you're going to be putting out in the market, how responsibly you put it and how diversified you can put it, it will really matter. What the regulator has done, especially for banks, is that actually opened up the field and say that, well, you can do other lending, you can do M&A financing, you can do various other things. So I would think that everybody, each and every of those guys who got money now, will have to look at diversifying into new modes and figuring out how they're going to be financing innovatively India's growth story. And of course, the other side is that, consumption, etc. will pick up. People will take loans only if they have jobs. And they will have jobs when there is capex. So the larger urge is whether corporate India will up their capex to be able to absorb all the money that's been reposed into the financial system. I see that as a huge challenge. Everybody has been good companies. People have got a lot of money. Earlier, at least when I was involved in the RBI deal, one of the issues was that maybe capital will be a differentiator going forward. But I don't think capital will be a differentiator anymore, because Shriram will be able to raise cheap funds, and so will RBL, so will Yes Bank, so will Samman. So at the end of the day, what are we looking at? We are looking at everybody having the ability and competing for more credible cost of funds. They will have to find more credible credit.
Okay, well, that point is taken. Interestingly, there is also a non-reoccurring, non-compete and non-solicit fee of $200 million, which MUFG will be paying to Shriram Ownership Trust. Jakes, just wanted to get your thoughts in this, on this in particular, if you've managed to look at the deal and what it might mean.
I think this, in some senses, a non-compete paid. Usually in the case of a control transaction, this is more specific to a control transaction, where if there's an open offer, then the non-compete is added as consideration received by the main shareholder. In this particular case, a non-compete being given, I think, is unique in that I don't think the Shriram Trust is going to be competing by starting another NBFC. So why they were given this at a 20%. My own personal feeling is that this will, in some sense, come in for a bit of a question, is what I think. That one shareholder specifically is getting a 20%, a $200 million number. If I saw that flash on the screen, if that's a one time, I'm kind of confused as to why that should be given only to one shareholder. Because I don't see that shareholder necessarily starting another company. So the question of non-compete is an issue that I'm a little surprised about.
Sure. Mr. Khara, what is your thought on that as well? And in terms of overall, RBI has been open, to these policies regarding FDI with that cap on overall the rights issue that you have. But how do you further see these regulatory actions bring more FDIs to the financial sector? And is our valuation for Indian banking finance space very attractive to bring more such FDIs and strategic partnerships?
I think from the valuation perspective, one has to look at the growth potential. So I think when you look at the growth potential being huge in the Indian economy, it has already demonstrated 8% plus growth. Going forward, the demand is quite encouraging. So I think that is something which will give the huge growth opportunity, and to that extent, the valuation will be something which will be a derivative of the growth potential, which will be seen in the days to come. So I think to that extent, I would say that perhaps it's a decent buy if one has to look at it from the perspective of say 5 years to 10 years time. And that is why when it comes to the regulators also are now quite open in terms of evaluating such phenomena. And as we have already seen that about 20% odd equity being owned by the MUFG, and also with just about 2 seats to start with, maybe with the passage of time, they will have a better hang of the company, and then they can possibly think in terms of stepping up the investment also. So that's how I read the situation. But yes, of course, in the banking system, of course, there was at a point of time, regulator was expecting that in the banks, they should have, the foreign investors should normally initially come in not more than 26%. But of late, we have seen that in some specific instances, case-to-case basis, this is also being reviewed. So I would say that regulator has got very open mind when it comes to FDI, and more so when they're looking at the FDIs coming through the strategic investors, which can actually bring in value for the business model also. The regulator is quite open to evaluate such deals.
Well, let me put that question then to the regulator, Mr. Khara. Mr. Rajeshwar Rao, compared to, say, 5-10 years ago, what has really changed to give the regulator this kind of comfort of allowing larger foreign capital? Is it just applying the same principles you had to now what is a stronger system? And also, by allowing this foreign capital to come in, how do you expect the competitive landscape for the NBFCs to change?
I think there is a greater degree of confidence in the capabilities within the Indian financial sector. The strength and resilience, as I already mentioned, is good. So I think there is scope for foreign investments to come in. And of course, as a sector, financial sector needs to grow quite significantly in the days to come. And capital is also going to be a challenge. So allowing foreign capital to come in will supplement the existing resource requirements or add to the resources capabilities of these banks. So I think it's something which we have allowed recently. At least some of the cases have been allowed, and I think so long as the guardrails are in place and the sectoral limits are applicable, I think those should be factored in by the foreign investors who seek to come in.
Okay, Abizer, quickly, 20% is where MUFGs come in now. Like in the case of the SMBC deal, which you're closely aware of, do you think this leaves the room open for them to hike their stake up to, the regulatory permissible limit? And also, after this initial euphoria of the deal getting announced is done, what are some of the key risks, investors should watch out for from here on?
One is that, there is no regulatory risk limit rather in an NBFC. So in an NBFC, they could go up and take a controlling stake if they wish to. And I think this is like a very cautious Japanese approach to say, let me come in with an initial stake, let me feel the ground, let me wet my feet, and then I'll see whether I can up my stake going forward. Yes, it turns out to be more expensive, but traditionally the Japanese cost of capitals have been low enough for them to make that investment. Having said that, now increasingly, I think I see more amount of capital coming in from Japan because their own benchmark rates have gone up. And because their own benchmark rates have gone up, very frankly, the issue is around, whether they will want to increase the stake going forward or they want to do a straight transaction. So what we have seen in both the banks, Mizuho as well as Sumitomo, is that they have taken a 20% stake. There is no limit for Shriram. SMBC clearly will have a limit up to 74%, which is what the banking regulator will want to then approve for them. But I think the larger offer here seems to have been the leakage in this particular transaction, that they did not want to leak anything to an open offer. And that's why maybe they came in at 20% now.
Yes, all right. Gentlemen, thank you so much for joining in today with your insights on this big deal in Shriram Finance. And Ritu as well for taking us through that conversation. By the way, on the non-compete, the clause has been put in because they don't want to prevent any potential conflict of interest between business of the company and other financial service business of Shriram Ownership Trust and affiliates. So this is the reason that they've given. And this, of course, is the list of the big deals that we've seen in the financial space, the FPI money flowing in last couple of months. With that, we'll do one thing. We'll slip into a short break. We'll get you more on the markets and stock-specific action on the other side. Stay tuned for that.